Thanks for joining me on my market report. My name is Mike. My market report is on mortgage rates. We discuss on a daily basis what's impacting mortgage rates, whether it might come something from the economic calendar, headline news, geopolitical. Sometimes it can get really confusing out there if you're watching the market, and all of a sudden market sentiment changes and it's good news, bad news, and vice versa. And if you're just watching this, you may not understand what's going on here and wondering why. We try to get into the nitty gritty of the details and try to get that information out to you, let you know what the sentiment is, why it's there, and try to help you to get a better understanding of why the market's reacting as it is. Sometimes it could be working on technicals or fundamentals. Sometimes it just off of feelings type of thing. So there's a lot of different variables that can go into affecting the market, and we try to get that information out to you guys. A little bit about myself is I am a loan officer. I do work as with a national lender. We do loans in all 50 states. If I could be of any service to you, if you're looking to refinance or purchase, we'd love to be there for you. But more than that, we'd like to be a resource. So if you guys have any questions, please reach out. We're here to help you guys. So without further ado, we'll jump right into it. Today we don't happen to have any economic data to report today, but this week does have a lot to go over, so I'm going to look at the week ahead here. The big day this week really will be Wednesday when the Fed gives their announcement. They'll start out their FOMC two-day meeting tomorrow, and then they'll wrap it up with their announcement on Wednesday. So with a, and let's take a look here. Tuesday, we do got some inflation data, so that could be kind of dangerous. It's on the wholesale side of things. Normally, it doesn't have much impact, but because it's such a hot topic right now, it could, again, it could pose more problems. Then again, Wednesday, we got the retail sales and New York Fed, which or Empire State Index, which is manufacturing New York region. We also got NHB Housing Market Index, so this will give us like the Home Builders Index out there. Let us know what's going on over there. Then we got Thursday, of course, Bank of England give their announcements. But we got some housing starts, building permits, and of course the Philadelphia region for the Philly Fed and jobless claims. And then Friday, we got the leading index indicator. So this is something we'll have to kind of keep an eye on along with industrial production. So again, quite a bit of data this week, but the big one, of course, will be the Fed. Markets are both down today, both stocks and bonds today. It's taking its cue from Friday, when they gave the report out there for mortgage-backed security, for the CPI report, inflation. So as I indicated, inflation came a little hotter. Headline news jumped up from 8.3 to 8.6%. Year over year, that's the headline news. Core actually went down a little bit, but with the price of oil and food and energy, people then you got the consumer sentiment. We're at a very low consumer sentiment. People aren't feeling good about things, so people are feeling like they're perhaps in a recession because the cost of goods are so expensive and having trouble to meet, make ends meet, so to speak. So this is a concern for a lot of people here. And of course, again, the Fed will begin a two-day meeting tomorrow. We'll have to wait and see what they say about it, especially that CPI report. There was some talk that perhaps that could be a catalyst for the Fed to come out with 3-quarter basis point hike. But I don't think that's going to occur because they don't usually like to spook the markets. I think they'll come out with a 50 basis point tomorrow, but they may. It's possible that they could. Investors will listen from, but they could potentially be a higher rate hike the next time around or thereafter. They'll hopefully give us that more of that information once they give the announcement. So, but I don't think we'll see it at this particular rate hike because they don't usually like to come out and surprise the markets, and for the most part, if possible. Um, yeah, that's pretty much the headline news right now. It's just the consumer sentiment, of course, is putting the bad moods in there. Investors are seeing this, even though there's profits with some corporations. The problem is that the consumer sentiment is feeling pinch, and they have no, they don't have they have no choice but to go ahead and buy certain goods. So, but you're going to see the indispensable goods probably will be showing some weakness. But things that they have to get by to live their life, those are things will probably continue to go from energy prices to obviously food, food and maybe clothing, that type of thing. So we'll have different things that will be essentials, and those will be the things that will people will be continuing to buy. But in the meantime, we're going to see some struggle, and of course, it could feel like a recession for many of those out there. So as you can see here, mortgage-backed securities are down 131 basis points. So yesterday we did, or Friday we did touch off 100, but we didn't end up closing down 73 basis points. Today is a different story, and it continued. So this is a pretty big swing from what we're seeing, 131 basis points. So what does this really mean, 131 basis points? Well, 100 basis points equals to 1 point in your mortgage. So if you were quoted a no point mortgage, uh, it's now going to cost you 1 point today. So today it will actually be a little bit higher because it's 131 versus just 100 flat. So this would be just over, this could, yeah, these are adversely affecting the rates dramatically. So we're seeing probably the two biggest spikes in rates. 2 days in a row, we're seeing huge spikes in rates as a result of this. Let's take a look at yields. Yields are punishing us. They are rising too. So we're seeing new highs of that. So even May, when we saw 3.12 and it got pushed downwards, today it continued rising. It's up to 3.36 right now, and we're still not seeing a ceiling as of yet. So we need to be very careful. If you might even want to lock in because we don't know where the ceiling might lie. So take a look here. 6 month. We'll look at 6 month. See we're at the highest. 1 year, even 1 year. We're at the highest we've been in 1 year here at this. 5 year. Um, Even basically 5 years. We're at the highest point in 5 years. We came close back around 2019, 2018, 19 here, but still a little bit higher than where we were at that point, as well as you can see by those basis points. So let's take a look at, lastly, we'll take a look at the average rate for mortgage conforming loan limits for the U.S. They do have points built into them, and of course, if you guys would like a rate quote, please, personal rate quote, please feel free to reach out. And these are day behind delayed. These are based mostly off of Friday's pricing here. So 30-year fixed jumped up to 6.13%, and 15-year now is at 5.38. So we are at the next level here. So 15 years now in the fives, and these 30 years are now in the 6% range on average. So again, if you guys got any questions about anything, please feel free to reach out. If you guys like these videos, please help us out and smash that like button. I know today's kind of a tough day to smash that like button, but please don't shoot the bearer of bad news here. Rates, of course, climbed dramatically again today like they did Friday. All right. Thanks so much for watching, and we'll hope to see you guys tomorrow. Bye-bye.